Good morning, everyone, and welcome to another edition of Bleeding Crypto's Market Update. This has been a while since I've done one for YouTube, to be honest. I've just been really busy with my own communities. As you many know, I have a free Telegram channel that all you have to do is just send me a DM or send me a message on Twitter, and I'll give you a link for access for free. I also have my Discord, which I also have a free section for my Discord. All you have to do is, again, send me a message and I'll send you a link to access that free version of my Discord. The difference between the Discord and the Telegram is post only, meaning that I only post. There's no reply box available for people to comment. My Discord is to interact with me. Even the free version, you want to interact with me, you want to ask me questions, you do it on Discord. So there's, I stay very busy with my community, the free community, the paid community, and my own trading. So it's just very hard for me to break away and make these videos. And not only that, but you see the comments on Twitter. When you try to educate people and you try to give people a warning, a heads up of what you're looking at based on experience, based on market cycles, what do? They just, instead of bringing value to the post, they just want to knock you down, and they want to tell you how wrong you are. And then when it plays out, what do? They just stay real quiet and they start deleting their comments. And it's like a cesspool. So it doesn't give you much incentive to continue to do these videos on a regular basis when you have people like that out there. And I know people just say, oh, just block them. But again, it just becomes one of those things that there's not much motivation. When you go into a community, into private communities like Telegram and Discord, it's just much different. Those are people who are seeking information. They're wanting to learn. They're asking questions rather than just blindly saying, "Oh, it's not going to happen because this person said it can't happen." There's no value to that. Show me proof of that. Show me a chart. Post a chart with your idea. It doesn't have to agree with mine. Post your chart, and you know what? It very well may work out. I'm not right all the time. No one is right all the time. But that is, in my opinion, how you should approach a post that you don't agree with. If you don't agree with it, at least be respectful and give me your idea. Don't just post something with no idea, with no evidence, just because you don't like to hear that we're going down or we're going up, either or. So again, it just didn't bring me much motivation to continue the videos, but we had a significant drop yesterday, and I've been warning you guys for a month now. It's coming. And I kept on, yesterday I reposted a lot of my old posts going back into mid-July, showing you guys that this move was coming. And just read the comments. People don't want to hear it. They all want to hear up only, up only, up only, because they're bag holding. People who are bag holding, that's how you know when they're bag holding, when they can't see what's staring at them right in the face, because they cannot cope with the fact that it's going to drop because they bought at the wrong time. When you look at a chart, even like this one here on the weekly, you see all these wicks, guys, all these wicks. Guess what? Guess who these wicks are? Do you think these wicks are institutions? Do you think these wicks are smart money? No, this is all crypto Twitter, all crypto Twitter. This is actually smart money selling into crypto Twitter while they transfer their bags and dump on them. And the evidence is out there. I follow an account called Crypto Quant, and they've been posting for a long time now, wallets, whale wallets with 1,000+ Bitcoin in them, unloading and unloading and unloading on all of these, but nobody wants to talk about it. Nobody wants to hear it. It's incredible. They want to have blinders on and just hope and pray that it's not true. And then when it happens, they're all wondering, oh, this is a scam. What happened? No, what happened is normal market cycles. That's how the markets work. The markets need to flush out, take profit to make it interesting for the institutions to come in and buy the down markets. Smart money buys down markets. Retail, crypto, Twitter, they buy up markets. You have to incentivize. People look at the news with BlackRock ETF and they think it's bullish. And it is, but not right away. Do you know why? Because the other institutions, the other fund managers, knowing that BlackRock is pretty much the king of the hill, if they're going to get their ETF approved, and most likely they will since they control pretty much the government because of the kind of money they have, then they're going to want to go in on Bitcoin now. But you know what? They are smart money. They're not going to buy here. They're going to buy a down market. They're going to buy the blood. So though it's bullish for long term, short term, you better be ready for a lot more of this. And here's the thing. When you tell people there's going to be a lot more of this, they automatically assume that tomorrow or at the end of the video, by the end of the day, this should be down here because BC said that we're dropping. Again, it's the ignorance of not understanding that things don't just go in one direction because they want you to get it over with and they want to rip the Band-Aid off quickly and they want to make sure you fill all your bags and you're ready to go so you can make money on them. Not how it works. The same way we stair step up, we're going to stair step down. Unless it's something like here, which is, again, I would call this is, I think, our cycle's black swan, which is all of this here, all the implosions that we had last year, the 3AC, the Celsius, Voyager, all of that stuff that just imploded. This was our black swan. Then we had the FTX collapse, continuing that drop. Now it's just going to be basically the market makers dropping their bags on retail and crypto Twitter because they understand that they're going to bring it back down and they're going to be able to buy it cheaper. And they already know based on metrics on how you think, meaning that you're going to be buying this all the way down here. By the time you come down in here, you're going to be so broken down morally. You're done with crypto. This is a scam. Because when you come down here, people are not going to be talking about 9 to 12,000. When we're here, they're talking about 20,000. When we're at 20,000, they're talking about 15,000. If we drop here, they're talking about 9 to 12,000. So you're going to try to outsmart the market. You've been beat up this whole time, and then here is where you start to capitulate. Whether it's here or lower, when you start to capitulate, market makers know it. They control the exchange. They can see your habits. They see how much money you have. They see how you trade. Once enough people capitulate, that's when the market turns around. That's when the market says, okay, we've got our inventory. We took it away from them. We handed it over to them at the top. We took it away from them at the bottom. Now it's time to go up. Why? Because who's going to make money on them? If you've capitulated and you've given them back the inventory, how are you going to make, how is the majority of the people going to make money on them? Because remember, when you buy something and you sell to the exchange, they're going to take it and buy it from you. But if they've taken it from you already because you've let go because you want to outsmart the market and buy it at a 50% lower, thinking, okay, I'll just make up the money if I buy 50%. By the time I come up here, I'll be break even. I'm good. That's what everyone thinks they have a unique strategy, when in fact, everyone thinks the same. And it happens cycle over cycle over cycle. Now, I've been getting a lot of DMs. What do you think? Do you think the bottom is in? Do you think your original 886 that you were talking about last year is going to hit 11,877? And it's funny because I can't say how many videos and posts I was very, very clear. My invalidation was breaking the downtrend. When we broke the downtrend, at least 30 to 50 posts and videos combined, this was the invalidation for me. This was the reversal, confirmation of the reversal of the downtrend to an uptrend. This invalidated my 886, and yet people still think that I am calling for 886 at 11,877. It could happen. I'm not saying it can happen, but for my TA, for the way I view the market, for what I was expecting, this invalidated that. So now that I invalidated that, what am I looking for a bottom? At the end of the day, no one really knows where the bottom is going to be. And what do? We rely on looking to the left on the charts. We rely on market cycles. And it's eerie how accurate and how close these market cycles behave. I did a study last year for my group, and I've been talking about it through the past few months on this study right here. I'm not going to go in detail, but I just want to give you an idea. I studied everything from the consolidation from the bottom of the market to the top, from the top to the bottom, from the bottom to the next mini bull run that we normally have before we find another bottom, and then we reverse back the math from the halving 6 months prior to the halving. We normally find a bottom, all of that, and the dates are within very close margin. I mean, some dates are like 20 something days, 4 years apart. Same exact consolidation within, like I said, within like 25, 26 days difference. It's incredible how programmed, I can't find a better word to describe, but how programmed everything is in crypto. And yet people don't want to believe it. They love using the phrase, not this time, as if taking profit is now different. As in market makers wanting to sell high and buy low is now different. There's nothing different about that. It's the only thing different is your perception of it. You think now because Bitcoin has went to $69,000 that it can't drop again? November of 2021, I was on a show with Crypto Wendy O, and I think it was Marta. I want to say, I don't remember if it was Marta versus on there. I know crypto. There was five of us. There was five of us. Val was there, and that's when I had said, you know what, the top of the cycle might be in, and if it's in, we're going down. We're going down below 20,000. That's when I was telling you guys 886 at 11,877. And by the way, we went $4,000 away from that target. 4,000. Back. How did I know that? Did I have some sort of crystal ball? Am I that smart? Nope. But you know what I am? I'm smart enough to do this. Let me show you what I'm smart enough to do. I am smart enough to look left. All the answers are there. Look left. That's all you have to do. You don't have to have a degree in economics to see what's right in front of your face. And to say that this time it's different when every single cycle behaves the same way? Within a margin. When I say exactly the same way, I don't mean the exact dates. 20-day difference on some of the metrics that happened 8 years ago. Come on. You got to have some sort of reason, some sort of a little bit of leeway. And that to me is pretty much exactly the same. So let's break down what I see here as far as the market and where I think we're going to go based on technical indicators that I use on a daily basis to scalp trade, to day trade. Same indicators, nothing changes. If they work on the hourly, they're going to work on the 4 hour, they're going to work on the weekly, they're going to work on the 1 minute, they're going to work on the 5 minutes. Indicators are indicators. The market, the only difference between a weekly time frame and a 1 minute time frame it's going to resolve much quicker. But everything's the same. Double tops, double bottoms, flag breakouts, bear breakouts, rising wedges. Everything stays it's exactly the same. It just works at a much quicker pace. So based on the tools that I use every day that help me to make a living doing this, I'm going to show you my opinion of what I see that's coming for Bitcoin. Am I right? Could be. Could I be wrong? Absolutely. But thus far, going back and measuring and utilizing those tools and then utilizing on a daily basis, I trust that I'm going to stick to my plan until proven otherwise, until it's invalidated. And that's the thing that I think most people have a hard time. They don't want to accept that you can have a plan and it can be invalidated, and once you invalidate, you have to react to that. Most people, if the plan doesn't work out the way you want it to, oh no, you're wrong. It went the other way. Yeah, you're right. It did. It got invalidated. Here's the invalidation to that. I mentioned it. They don't want to listen to that. They just want to be the first to tell you that you're wrong, but yet they don't provide any type of constructive criticism, or at least give me their viewpoints based on the technicals the way I did. So let's go ahead and get started on the analysis. So what I'm looking for here, the first thing I want to do is just put a fib. I want to put a fib from the swing high to the swing low. And I'll explain to you, for those who are looking at the chart and saying, wait a minute, I'm going to be real accurate. I'm going to go to here, and I want to just, give me 1 second. I want to 305. Go. Oh, whoa. Sorry. What did I do? I'll explain to you why I'm going from here and not the other wicks. Give me 1 second. I'm just going to do it here, right? That's good enough right there. Then I'm going to put a full fib on here. Okay, so I consider this the swing high because these here are just liquidity hunts. That's all they're swing failures. I'm not going to count these swing failures. You could if you wanted to. If you want to put this top of this fib here, absolutely you can. I am not, because that's not how I do my analysis. These liquidity, I understand what this is. This is just a liquidity hunt, and this isn't real value. This isn't real trading, in my opinion. Well, I can't say it's not real trading. It's just not something that I include. In any case, again, this is, for me, swing high, swing low. Now, as you can see, we hit right now a very key area, 382. 382 and 0.50 to me are continuation fibs. So what does that mean? That means that when I'm scalping, when I'm day trading, and I see a retracement, I'm generally looking at two different types of fibs to see if we're going to bounce from there or if we're going to come down and consolidate. One of them is a continuation fib, and I'll show you right now. This right here. So as long as we don't break the body candle, doesn't close below the 0.50, the continuation rule still in place, meaning that we can bounce off of 382 or we can bounce off of 350. If we break and close below 350, then I'm looking for a reload into here. And then normally when we hit a reload into here, and somewhere inside of this box, it could be the 618, 706, or 786, we tend to build a market structure on the lower time frames, and then we start to move up. Obviously, if we break below here, we're invalidated and we're going much lower. But these are the rules that I use, again, based on that same mentality of invalidation. If we invalidate the continuation rule, we go to the reload. The only different behavior is a continuation rule tends to bounce quicker and continue, and a reload area tends to wait a little bit longer. Not always, but actually, let me give you an example. Let me give you an example of that. Watch here, just so you guys can kind of just get the quick example here. Let me show you right here. So we had a move here, swing high. We had a swing low right there. And look, we came down. We landed on 382. We tried to go. We didn't. We went up 0.50. And then look, we took right off. The candle, we had a wick, but there's no candle body close. We continued. Now, apply that same one to the prior one. We had this move here. We had a swing. Again, this is a swing failure, so I'm going to go off of here to the low. This one did not break 0.50. It stayed above 382, and we went off. You see that? You see the difference? There was no candle body closes here. And what does a continuation rule do? It just tends to go. When you tend to go to 0.618, it tends just to consolidate. So that's just a quick lesson. I have a bad habit of I can't do these videos very quickly because I like to explain everything in detail so people understand. It's kind of I think about when I was learning how sometimes people would just do stuff and you want to understand the reasoning and nobody would ever explain it. So I tend to go a little bit overboard on my explanations, but I hope you guys just bear with me. All right, so that's the first thing I look at right now. I want to look at the whole macro view from what I perceive as a swing high, not counting the deviations, the liquidity hunts, to the low. Now, 618, love it. Golden pocket, love it. Golden fib is there for a reason. 706, however, all my members in my Discord know that when we're trading and we're doing these zones, 6706 gets hit more often than 618, more often. And I trade with my group on a daily basis, and we post these charts, and I would say 7 out of 10 times we bounce off 706. So it's one of my favorite levels. I call it the Chingus levels because Chingus X is the one who turned me onto this years and years ago. 886, again, I've talked in detail about this. This is called the institutional level. This is where institutions like to buy. They like to buy the blood. They like to buy down here. They don't like to buy where crypto Twitter buys here. They don't like to buy where retail buys. They like to buy where smart money buys. 88 cents on the dollar. Now, let's go ahead and move. Let's find, now, once I'm here, I want to find confluence. I want to find reasons for us to hit a certain level. And in order to do that, the more confluence that I can find, the better, in my opinion, the higher the chance that we're going to get to those levels. So let's go ahead and start with something that's really that I like to use here, and this is going to be the POC, the VRVP. VRVP is going, look at that. VRVP now is starting to shape up and give us some confluence with my favorite fib, 886. So right now, the point of control is at $17,090 right there. That's point of control. When I look at this, what does this tell me? You see these areas, see these volume bars, guys? These are the areas where they have the most interest. When you see areas like this, these will tend to fill. These are areas, these are gaps in the volume profile. You don't have to believe it, guys. But if you back test it, you will see how accurate it is. When these show up, these will get filled. Look at that. Look at that. See this shelf right here? See this gap? Look at the shelf. Look, filled. Look, filled. You see how accurate these things are? Everybody wants to try to disprove when you use an indicator rather than be appreciative and learn from it. Again, this is why I don't make that many videos. You shouldn't use that. That doesn't help. And yet you're trying to show them how it does, and they don't want to believe it. Go back to here. You see this massive gap here? This massive gap caused by this upthrust will get filled more often than not. Is it a 100% indicator? Nothing is a 100% indicator. But the high probability makes it enough for me to respect it, utilize it, and I back tested it, and I use it in my own TA, and it's worked out perfectly. When do I stop using it? When it stops working. So, first area right here. We have a really big area of a gap, and I believe that this area here will get filled. You don't have to believe it. You could buy it today, and that's okay. What you buy and when you buy, guys, doesn't affect me at all. I don't care. I'm giving you my opinion where I plan to scale in to prices, into Bitcoin. And I'm going to continue to. I don't like dollar cost averaging at 30 at the highs here, especially knowing that BlackRock's coming in. I'm not going to buy the highs because BlackRock comes in kind of like a CBOE and a CME. When they got approved, that was the top of the market. What happened after that? We went right down. We went straight fucking down. Why? Because institution says, okay, if you're in, I want to buy some, but I'm not buying here. Bring this down to 886 and I'll buy it. That's exactly what we did. We went down to 886, and that's when institutions starting to basically take your bags and hand it and take possession of your bags, basically. Same thing for me here. In my opinion, we're going to go down into this area here. Okay, now this is just one confluence. Can I find another one? Yeah, you know what? There is a beep. If you guys follow BPRs, look, there is a BPR right here to here. BPRs, whether you believe them or not, I play them. That's how I devise my trade setups. The good thing is that I have a Discord with over 600 members, Telegram with over 600 members. They see me post these charts. They see how accurate they are, and they're amazed of the accuracy of the tools that I use. Was these tools easy to find, easy to use? Am I brilliant and invented all of these? Absolutely not. Everything that I use, everything that all my entire tool system has been copied and taken from people that I respect, that I appreciated them sharing their knowledge with me, that I've back tested for a long time before I implement it into my tool case. Your favorite influencer, guys, no matter how smart he or she is, they didn't invent any of this stuff. They themselves copied their system off someone else, and they understood it. It resonated with them, and they're able to make money. That's all we're trying to do here with these YouTube videos. We're trying to help you make money. So at least show some respect and curb your idiotic comments. If you don't want to believe it, don't believe it. But these are proven tools that I use on a daily basis. Okay, so we have that. So now we have confluence to fill this BPR. We now have the BPR, the bottom of the fill. Look at this, lines up perfectly with 886 and the POC level. 3 reasons to take a trade with using 3 different types, 3 different methods of trading. There's a very smart analyst, trader, 30 years in the market, stocks, obviously, and then moved into crypto many years ago. And I've reposted his stuff, and I've asked, and I've told you guys should follow him, Brian Beamish. Very smart guy. He talks about the gaps. And you guys have seen me. If you have followed me for any amount of time, I've been using his gap theory for years and years and years. And look how accurate they are. There is a weekly gap right here. There's a weekly gap right there. So right here, to me, is, give me 1 second. My gaps have to be a certain color. Just a little. Now you may not see it. You don't have to see it, but you open up these candles. I'm not going to waste my time doing that. Again, you don't have to believe me. I've already done the homework. You can open up these candles, and there's going to be a gap right there. You can do that on your own. So now we have a gap here. Okay, we have something else. Tails and wicks like to be eaten. These are wicks, these are tails. I have the habit of calling these wicks as well, but I'm only calling this a tail right now because it's one of his pet peeves. This is technically called a tail. But for simplicity, and again, most people call it a wick. Wick is the top part of the candle, the bottom is the tail. But I just call it a wick, just for simplicity, so I don't have to explain it every single time. People say, why are you calling that a tail? I don't want to have to answer that question every single time. So I'm going to, if Brian, I don't think Brian hears my shit, but if he ever does, I just want to give him credit. And I want to at least say that I called it the right terminology. So these wicks, they like to get eaten up. And this is a theory that I've been following for many years. All my Discord members, they all follow the wick theory because it works. 2/3 of this wick is considered filled. As long as 2/3 of this is filled, then you're good. Easiest way to measure it is just grabbing the 50%. That's it. That's the easiest way to get 2/3 of this candle filled and that's when it's considered filled. And again, you don't have to believe this. I back tested it. It's proven. It's a proven method that all of my members who've been following me could vouch for it. And not that I need your approval, but those who, I'm sure they listen to my videos as well, so I'm sure they're sitting there nodding yes. And if you want to make stupid comments on my videos, they're going to pretty much back me up. Yeah, he's been using that for many, many years, and it's been very successful. Is it 100%? No, it's not. But it's more accurate than not. So, so this area to me is also. Give me 1 second. Just bring it out here. Let me bring it out here because again, I'm trying to find confluence. So I have confluence here, and now I have confluence here. And this here, guys, just so you know, has a 91.4% probability right here. How do I know this? Because the person who I learned this from has taken the time to do that. So and I trust him, and he's smart. He's much smarter than me. So I'm going to believe someone that I respect, someone that has helped me grow as a trader, along with many other people. And I'm going to utilize, and I'm going to believe in it. And I've been using it, and it's been playing out. So here's another area of confluence. We've got the 50% of this wick, which will fill 2/3 of it, 2/3 of the candle, and the weekly gap. Do you see what I'm doing here, guys? It's a process of finding confluence. One indicator by itself, to me, doesn't hold a lot of weight. It's the beginning, it's the foundation, but then you have to build on that foundation. You have to find more reasons. You have to let the market prove it to you. You guys should be playing defense every single time. You're defending your capital, and you need a game plan, and you need a proven game plan. My tools are proven, and now I want to build on that indicator. I want to make sure that this plan has some merit. So now we have confluence here. So we have also, if we go to the daily time frame, we have a very nice right in here. Let me grab my tool here. Right there, we got another BPR on the daily time frame, right in there. So let me go back to the weekly. So now we have another area of confluence. We've got the bottom of the BPR to get filled, which lines up right where the weekly gap is, which lines up right where the 50% of the wick is. Do you see the pattern, guys? And again, here's where crypto Twitter's sourness, inexperience is going to show. They're going to think that this is going to happen next Thursday. And if it doesn't happen, BC, remind me this in 3 months. Remind me this remind me this in 1 week. Remind me this in 2 weeks. It never happened. They have zero patience. They think that the market is going to fill immediately because they need it to happen. When the market maker's job is to wear you down. They're not in a hurry. Only you are. And it's funny that they'll make comments, and then when it plays out, they're silent. They are silent. It just reflects on their ignorance. That's all it is. It just reflects on their ignorance. Okay, so now we have two areas that I am interested in. Do you notice how I'm not talking about doom and gloom, guys? I'm not talking about 12,000, 9,000. I'm not talking about any of that. However, there are people that I consider much better traders than I, much smarter traders that I respect and I follow and I listen to. And these guys are calling for 9 to 12,000. And they make a very good case for it. I still, in my inexperience, I guess, can't see that technically happening. I believe that if the time to get to that area would have been here on the drop of FTX. If the market defended it here, again, we only got it within a $4,000 away from that. If the market defended it here, the time for us to go to that area and clean that area up would have been here. So I am going to be pleasantly surprised if we do break this 15,000. I will give them this. And now, again, I'm not trying to dispute what they're saying. I have my own beliefs. I have my own system, and I've got to stick to that until it's proven otherwise. So in my system, I could fathom a break below here, a deviation below here, and a continuation. This to me is very low probability. Very low probability this is going to happen. High probability this is going to get hit. Good probability this is going to get hit. The POC 886. Low probability that a deviation to here and then a bounce. Obviously, this will be the bottom of the market. You have to understand, guys, the halving is coming. It's programmed. Bitcoin's going to go up. And it's so funny to hear comments of people who don't believe it. And yet the data is right here. The data is there. And they want to say, oh, no, that's not going to happen. It doesn't necessarily have to happen. It's going to happen. You can stick your head out of your ass and look for a second to the left, and it'll prove it to you it's going to happen. There is going to be a bull run after the halving. Once, I believe it was in 20, let me see here. We dipped after the halving for 4 weeks. We dipped and then we took off. But we took off. Let me see here. When was this? I think it was, you know what? I don't want to go into, I just reviewed it this morning, but there was one instance that after the halving, the market dip. I don't want to make this any longer. Anyhow, you can, again, you don't have to believe me. You don't have to believe me, but there was one instance. It dropped for 4 weeks. Right after the halving came, it dropped and then she took off. But the point is that after the halving is when the bull run starts. And when it dipped, it didn't put a new low. It just dipped a little bit. It was already coming from the low. In my opinion, when we hit this area here, whether it's here, or the deviation here, that is going to be the last chance to buy. And that has been the last chance to buy on every single cycle. In 2015, we dropped to a low like we did here. You know what we did? We came down and we dropped $12 below the prior low, and she took off. Every single cycle, we have put in a low. We come back to confirm that low. 2015 was the only time that we broke below the previous low by $12, and we took off. All the other ones have been, they tested the low, they didn't quite break it, and then we were off to the races. Now, when I say off to the races, guys, it doesn't mean we're going to V-shape and we're going to go straight to all-time high. Again, please have a realistic expectation of the market. Just even looking at this, even looking at the latest bull run that we have, look at this. I want you to see something real quick. I wasn't planning on going into this, but I just want you to get some context just to understand. And I'm going to use actually my halving. I'm going to use my halving chart right here, because this is going to help just at least show the context a little bit. When we had the low here, which is the COVID low, there's always a reason. Remember, always a reason to drop. And this is the hardest part for me to convince people, is they will say things like, no one's going to sell. Who's going to sell? And you're like, it doesn't matter. They think because crypto Twitter's not selling, that it's not going to happen. It's just like crypto Twitter doesn't control the fucking market. Market makers control it. Smart money control it. Smart money will make sure that there is a low for the big boys to come in and buy at wholesale. When that low happens, look, it isn't a straight moonshot. Look at this. It's a very, very low candle, methodical, just move. Why do they do this? Do you know why they do this, guys? They don't want you to buy. They want you to have the mentality, oh, no, on the back test, I'm going to buy. We dropped here. On the back test, on the deviation, that's when I'm going to buy. What do? They make you think, it looks weak. Look at that. If this was a bull run, we would be taking off in a God candle. Everybody's waiting for a God candle. And yet, look, we're just slowly going higher and higher and higher. Look, very slowly. And then what happens here? Oh man, it's already up. It's already up 100%, 200%. I don't know if I can buy that. I'm gonna wait for a pullback. You know what happened, guys? We went from $3,700, $3,800, all the way to what is this? $42,000 before the first pullback came. And this pullback here was, what was this pullback? I think 34%, 31%. 31. So imagine that. It went, so it did, look at this. It did almost 1,000%, pretty much 1,000%. It did 1,000% before the first real pullback. It left everybody behind. And then look, once people understood that they didn't buy, that's where you see these big candles. These were not institutions. This was retail. This here was retail. Smart money just baits you. They bought here. They bait you. They bait you. First pullback came, and then retail just jumped in after 1,000% return came in. It's incredible to see the way, and you look back at the previous cycles, the exact same thing. Same mentality, same bait, same back tests as far as finding the last bottom. Here, let me refresh here. Finding the last dip before that happens. When this dips, the problem is here. You don't have a plan. And you don't want to buy because you want to try to catch the bottom rather than finding areas of confluence and buying those. There is a trader that I respect and I've been following. Really smart guy. He's got an incredible system of trading. Remember, guys, everybody has their own system. You don't have to believe it, but you should respect it. And you should at least take the time to understand, well, if it's working for him and it's not working for you, what are you doing wrong? Not the system's not wrong. If it works for him, that means it's something that you don't understand. And I'm referring to Castillo Trading. He's got an incredible NPOC level system, and it's accurate. And here's the thing about his system. It doesn't work for most people for one reason and one reason only. One reason, guys. Patience. When he puts out those NPOC levels, it takes months for them to hit. And that's where people fail because they're like, it didn't happen. It hasn't happened. It's been 7 days. It hasn't happened. It's been a month. It hasn't happened. He doesn't care about time. None at all. He's got all the patience in the world. Why? Because it's a proven system. Proven. He makes a living off that proven system. There's NPOC levels right here at 24,938. So I'm going to put it right here. And I like, again, I'm one of those traders that are very, very grateful. And whenever I grab something from someone else, I like to give them the respect of thanking them for helping me to become a better trader. Because this is one more tool that I now get to use that I didn't know about had they not shared their incredible knowledge. 24,938. And I hope that one day someone will regard my TA that in that manner, that I was able to help them the way others have helped me. So coming into here, oh, by the way, he had 4 other NPOC levels between here and here that he posted like 2 or 3 months ago. And guess what? They got filled yesterday. They got filled. Oh, no, maybe not that long. Maybe about 6-7 weeks in crypto. It seems like forever. But I think like 6 or 7 weeks. I believe it was on this here. On this move here. So this was back in June. So about 2 months. A couple months. And we hit them. We closed them all yesterday. Except for this one. This is the only one that's not closed yet. Okay? So we've got this NPOC level. And there are some to the upside. There are some to the upside. So don't get me wrong. There are also to the upside. So I still think that we do have it, but they could easily get closed next year. Or they may get closed sooner than that. We don't know. But these NPOC levels are very, very powerful magnets to the price. They get resolved. And look at the NPOC level. Again, you've got the confluence with the gap. You've got the confluence with this support, 382. All of this stuff doesn't happen by accident. Everything has a very well planned out moves. People think that this stuff isn't programmed. Let me show you this. I don't know if many people have noticed this or even taken the time to really analyze this. Look at the top of the market. This market at the top was a little over $3 trillion. $3 trillion. They stopped it at exactly $69,000 to the penny, not $69,234.17. Exactly 69,000. That's it. That's the top. We're dropping it. And I can't tell you how many times these even numbers like that play out. Not play out, show up on the market, show up on the chart. I mean, that's just blatantly telling you that they control the market. When they can stop it at an exact level with so many million, they're telling you right there, they are in control. You are not in control. Your little lines, indicators, ribbons, they don't mean shit. They will drop it at exactly the point that they want to drop it. And then you can look at it, you look in the candles, and yep, 69,000 to the penny. And this happens so many times. I think it happened here. Where was this? I think it was right in, there was another, it was just quite a few instances where it falls again on the exact dollar. That was just one of them to me that really stood out, the top of the market, how they ended it at the 0.00. Well, in any case, okay, so let's move on here. So now, for me, we broke the trend. We were in an uptrend. And there is a line that I've been have on my that I've been talking about for a while, and that line was broken. And you know what? It probably shows better on this chart here. This chart here, basically, what I did here is I took the top again, the high, the low. I cut it in half, cut this in half, and then I put a mid range within that quarter. And look at this, guys. Just look at all of these points here. These are all even points. Look to the left and look at how accurate. Look how accurate these points are. These lines, the dotted yellow lines on the middle of the white points, and every single one of these yellow dotted and the white lines, you can find confluence. You can find support and resistance. Look at that. This diagonal trend line was broken. We lost it. Is it confirmed? No. Why? Because this is a weekly chart. And if I'm going to base these points off of a weekly chart, I can't, as an analyst, say that this is confirmed because we have 2 days left for the weekly candle to finish. But we deal in a realm of probability. As weak as the market is, do you think the market is going to go up $3,000-$4,000 to close here? Unlikely. Possible? Of course, anything's possible, but unlikely. So I believe that this candle, just like this candle confirmed to me that my 886 was invalidated, I believe that this candle confirmed that this uptrend is invalidated, and I'll get that confirmation in 2 days. What next? Well, one of the things that I will say is that more often than not, if not like 95%, when we break from a level, we go back and we back test it. It is just one of those rules that I've learned from the very beginning. And if you do anything, follow any rule, look at a back test break. And that applies for both bear breaks and bull breaks. So I am expecting this candle to close below this line. I'm also expecting us to come up here and back test this. Now, we have two lines that are converging together, which is the diagonal line and the horizontal line. I believe we're going to come back in here. Here is where my invalidation will take place. I have, the way I view the market, we've broken the downtrend. We're going down. What's my invalidation? That's important. Every trader needs to have an invalidation, just like I had an invalidation here. My invalidation is if we climb above here, Okay, we close here, but then the following week, we get back up in here and we start trading higher. This was just a deviation. One of deviations of many. You see deviations all the time, and we're back up. But the market needs to prove it to me. What I believe is going to happen is we're going to come up here. We're going to back test this here, this diagonal and horizontal line. And then when we break, get ready. Get ready. Because you see yesterday, I don't know if you guys were on, I was online and I was scalping. When this candle broke, guys, when that candle broke, everything froze. MEX and MEX and Bing X, their apps were worthless. They were freezing. Everything. And I don't know about the other ones, but those two that I trade on, they were completely frozen. I couldn't get myself to close. The trade wouldn't close. I was on a 20x leverage, and I just kept on seeing the profits just massive, and I'm trying to get the fuck out of there. Luckily, I was able to finally close it. I had to hit the close and confirm at least 9 times to my trade finally close, and I was able to close and profit. Thank God for that, because it literally went from green back into red, back into green, back into red. I'm like, God damn, I need to close this, and it wouldn't. It didn't close it where I originally wanted, which was a lot more ROI than what I had, but I closed with profit, and I'm happy with that. But my point is that when we get rejected, if we get rejected and we start heading down, this shit is gonna go down quick. Why quick? Because the market makers don't want to give you a chance to jump into the shorts. They don't want to pay. They do not want to pay. I've been posting the HyBlock and the daily crypto traders new. Give me 1 second. Let me just generate this real quick. Their liquidity maps, and it's so accurate. It's eerie to see how accurate they are, and yet people still don't want to believe. Oh no, that has nothing to do with. You should see you read the comments when I post these. The ignorance is incredible, and a lot of them I actually started lately just deleting, just blocking them, because I can't stand stupid people. And when they kind of tell me that this stuff doesn't work, they're not ignorant. They're just straight stupid, and I do not like stupid people following me. So but some of the posts are still there, so I can make fun of them. Basically, this stuff is very accurate. Look, this is going to get filled, whether you want to believe it or not. This cluster of heat is going to get filled. Bottom of this cluster here is 23,200. Let's go back to our chart. 23,200. Where is 23,200? Can we find confluence with that? Right here. What is this? What is this red line here? 0.50. Bottom of the continuation rule. So I said earlier that my continuation rule, we either bounce from 382 or we bounce from 0.50. I believe we're going to come here. Doesn't mean I'm right. My rules are that as long as we close above here, we still have a chance to go here and bounce just like we did here. Maybe we put in a higher high. Maybe we go to that $32,400 to grab this liquidity here. Maybe we don't. We'll grab it next year. I don't know. I have to play in the realm of probabilities and invalidations and validations. We bounced off 382. Absolutely perfect. This isn't a coincidence. 382 is a continuation rule for a reason. We could bounce from here, regain the trend line, and up she goes. Let the market do it. Let the bulls prove it to you. Until that happens, I'm not convinced. I'm convinced that based on this information here, based on my study on the past cycles, we are not going to go to new highs from here or here. We are going to be testing the lows more so because of the ETFs that are coming. Institutions do not buy up markets. They buy down markets. This is an up market. This is an up market. This begins to be a down market. This is the beginning. Between here and all the way, however low it's going to go, that is a down market. Institutions buy 886. That's where they buy. Look at this. Let's look at this here real quick. Here's the top of April. Here's the bottom. Here's the bottom. Here's the top. Where did they buy? Look. You tell me. Again, you don't have to believe it. You don't have, I'm not trying to convince you to follow me at all. I'm giving you my perspective based on years of backtesting these tools. It's okay. It's okay if you don't believe it. Like I said, it doesn't affect me at all. But you're asking me to make a video on my opinion. I'm giving you my opinion. Here's where I want to start dollar cost averaging. Here's where I want to, and if I'm wrong, guess what? It doesn't affect you. I buy it higher. It doesn't affect you at all. This is where I want to start really dollar cost averaging in here and on the way down and hope this hits here. And if it goes lower, great. If it deviates here, great. If it goes to where other people much smarter than me are saying 9 to 12,000, great. Great. Imagine how much more Bitcoin I can buy from those levels. And imagine how angry and sour all these people here. Remember this, guys? I remember this so clearly. You guys remember this? Crypto Twitter was going fucking nuts here. You guys have to remember this. If not, just scroll up. Scroll up to August of 2022 and read your favorite influencer. The bottom is in. Right here. This bottom is the bottom. It's in. We will never go below this. Every single influencer with 50,000 followers or more, even the bigger ones at 300,000, the bottom was in. Oh, they're all laughing. Can you imagine? Right here, I remember posts where they were saying, can you imagine the plebs that think that we're actually going to go to a new low? It was fucking comical. Fucking comical. Go back. If they haven't deleted, I'm surprised. They probably deleted a lot of it. But if you can go back, you can go scroll up to this time and read it. It's so entertaining. They never want to believe that a market cycle is going to complete and come down. And look, we put in a new low. But you know what causes a lot of this, guys? People aping into longs, market makers seeing those orders, they create heat, and what do? That's money for them. They're not here to make you money. They're here to take your money. So all this heat here is from longs. All this heat below is from longs. People believing their favorite influencers. No, we're not going up. Our proven indicator has never been wrong. It's flashing a buy. It's flashing a buy signal on the weekly, on the monthly. Yeah, what happened? I read a lot of that a couple weeks ago, 3-4 weeks ago. What happened to the ribbons? What happened to the flashers? What happened to all the? This has never been wrong since the beginning of Bitcoin. Really? Well, guess what? Your indicator is shit because we just dropped down to 25,100 and we're going to go lower. Why? Because there's a payday waiting for the market makers. Market makers do not let go of a payday. And if you're wondering here, these here, yeah, these are heat. Could we go up here and grab this? Absolutely. But it's not bright enough. What do they go after? They go after the bright. And you know what they do? They bait you to build liquidity. That's how they build liquidity. They bait you to build liquidity. When you least expect it, they will go and grab it. Just like yesterday. What is that? $3,500 move in a 1 hour candle. $3,500. If you think the market can't move that way, man, you have another thing coming. The market will grab it. And there was no news yesterday. There was no catalyst. There was nothing. It was just market makers said, fuck it, let's go. Let's go. Let's grab it. We have enough people that are believing that we're going to be bouncing, that we're going to be going up, that the trend is still intact. Let's go grab it. And they came and took that liquidity. All the moon boys got fucked yesterday. All of them. That's why they were so quiet yesterday. You notice after this drop, all the moon boys Nothing. The signs were there. The signs were fucking there. Nope. They don't want to believe it. Now they're going to try to convince you that this is the bottom. They're going to convince you. And when we go back to back test that, guys, when we go back here to back test this, please put a note on your chart. Put an alert. Put an alert at 28,443. Put an alert there. And just put BC warns of the moon boys on Twitter trying to convince you that this was the bottom. And watch what's going to happen. Watch the rejection that's going to happen. Could we come up here in a wick and grab some of the liquidity that's up here? Yeah, 100% over here. I don't think we'll go up to 32. But here, possible. Totally possible. Unlikely, but possible, in my opinion. Depending on how much, again, it all depends on how much liquidity they can build. That's all it depends on, how much liquidity they can build. So a lot can happen between now and then. They build enough liquidity, they'll come and grab it. They'll come and grab that. But make no mistake, guys, institutions have been selling. They are not buying this. They're going to buy this or lower. They're not going to buy this. More ETFs come on the scene, the lower we are going to go. Is it going to happen tomorrow, next week, a month, when you need it to happen? Nope, it is not. It is going to happen when you least expect it. They're not going to make it easy for you guys. Just, if you don't believe me, again, go back in history and you can do this work. You put in the work. Everybody wants the answers, but nobody wants to put in the fucking work. Those are the people that do not deserve the rewards that the market gives them because they're lazy. They don't want to take the time to do it. All right, guys, I'm going to end the video here. There's really not much more to cover. You guys, I think I was pretty clear on my case on what I think is going to happen. Am I always right? No, I'm not. But I think I made a good, sound case for my reasoning, my thinking. It's going to take a lot of time and patience for it to play out, which I have and I understand, and I'm willing to wait. By next week, people will be telling me how it's invalidated because it didn't happen. It's been a week, and that's okay. I just laugh at stupid people. It's no big deal. But just wait. Just like they said this wasn't going to happen, and it's happening, wait for the next step. Next step, back test. A trend line that's been established from last year, November last year, is not just going to break, is unlikely to just break straight down. No. They have to build liquidity. They're going to fuck with you. They're going to make you think it's going back up. You're going to pile into longs. They're going to come and grab all those longs. How do they do that? They want to make sure that they build that confidence. Right now, the market is in shock and awe. They're not going to bring it up right now. It's too soon. The wound is too fresh. They need you time to settle down. They're going to give the weekend some time for you to go out, go get drunk, go get laid, go make you think that you're a genius again. Come back Monday next week. Crypto Twitter starts getting their balls again. They're going to go pick up their balls, and they're going to say, oh, yeah, okay, I think we found a bottom. This was the bottom. It held. We're going back up. Look at the volume. Then you're going to go in. Then they're going to drop it back down. It's going to take some time for it to happen, but just watch. Just watch. Could I be wrong? Yes. Could this time be different? It could. Has it been different? No, it has not. That's the key. Has this cycle been different than the previous ones? It has not. Actually, the only difference that it has, it's been weaker. Last cycle, we had a much bigger bounce. The previous cycles, we've had a bigger bounce. This cycle, we've had a weaker bounce. So yeah, you can't say to a degree it's been different. But we had a bounce. So it's not really that different, but just the magnitude of the bounce has been the weakest in all the cycles. So you have that. You can play that. You can play that card. It has been different. At least you have something to go on. Hope this helps you guys. I'm here to try to help you. I don't want you to lose money. I don't benefit in you losing money. I have no reason for wanting for you to lose money. You don't have to believe anything I say. but at least respect it. Take a screenshot. Give it time. Don't show me the screenshot next week and say, well, BC, it never happened. What happened? That's not how it fucking works. Don't be ignorant. If you come at me in a week or two and tell me that we haven't hit this my level yet, what happened? I'm gonna block you. I'm not gonna block you because you're telling me that I'm wrong. I'm gonna block you because I think you're stupid because I told you to give it time. When does this get invalidated? Tell me that this didn't hit when this is at 36,000 because I don't think we're gonna hit 36,000. 36,000 is gonna invalidate this because 36,000 will completely change this fib. This fib is based on this high. And when I made this chart, I made a similar chart for my group. My own group was telling, no, BC, that's not going to happen. And since then, since April, it hasn't been proven wrong. We've had wicks. Wicks don't prove shit. They don't count. Nothing. In here, people are telling me, BC, that ain't going to happen. You're wrong. You're going to be left behind. I'm like, okay. It's my money. I'll get left behind. That's okay. That's okay. And look where we're at. 25.2. So I'm not going to entertain your stupidity. All I ask is that you give it time. Remind me in 6 months. Put it that way. I think that's a reasonable amount of time for you to come back and tell me I was wrong. Give me 6 months. Remind me in 6 months and let's review. I'm going to keep this chart. And I'm going to do another video months from now about that. I'm sure I'll make other videos between now and then. But when all this plays out, we're going to look back and we're going to see. And I'm going to refer back to this video so that everyone can then listen. The best way, guys, to validate a trader is don't listen to his current videos. Listen to his past videos. How well did the market play out to his analysis from months ago? Not from the current, but from months ago. Does he know what he's talking about? I'm going to share something with you guys. This here, I was begging people to sell. Right here, begging him, fucking sell, get out of here, get out of fucking XRP is gonna come back down. I do a morning recording every single morning for my group, updating the market. The last time I told them was here. I even timed at 7:31, timestamp on my video at 49 minutes. I reminded everyone that XRP will go down to 42 cents. It will go down. And we kept on trending lower and lower. Guys, take it. Take your profits. We're at 70 cents. Take it. Nobody wanted to. I'm sorry, BC. I totally understand, but it's different. They won the lawsuit. There's no reason. Who's going to sell? That's people's favorite way of coping that prices are going to maintain and are going to go higher. Who's going to sell? And again, I refer to there's two different types of people in this market. Smart money and stupid money. Stupid money is what I consider Twitter. Smart money is what I consider institutions. Institutions will always dump on stupid money. Stupid money doesn't take profit. And look, yesterday, vindicated again, once again, right when we went down to 42 cents, 42.26. And I called it right here. And I have a video proof of it. And this is what I mean about going back into, and I do this a lot. I put, here's another example. I beg people right here. I beg people at 420 right here on this candle. I have a lot of people in my group that are link fanatics, that are part of the link army. I was telling them, get the fuck out of here. Get the fuck out of here. Sell. We may get a deviation. So I told them this may happen. We may get a deviation. But make no mistake about it. We are going to go back down to the bottom of this channel. No, BC, you don't understand. Link is a necessary component to bridge other protocols together. That's not going to drop. That drop that we saw here, that's it. There's some stuff coming out. It's going to be at $15 real soon. It's a great devs, great team. Price, guys, has nothing to do with devs. And that's the misconception that most people have, again, because they're ignorant on the market. Nothing to do. A price fluctuating, most devs they don't pay attention to the price. You ask a dev in a Telegram, hey, why did it drop? Oh, it dropped? They don't care. All they do is they're developers. They're working on the back end, improving the system. Price is controlled by fear and by greed and fear by the markets. It has nothing to do with the project. Nothing whatsoever. Everybody loves Binance. Binance is the biggest exchange in the world. Guess what? They were $5 the last cycle. They're the same exchange they are now. They were $5. They went up to $690. Now they're worth $230. Guess what? TA says they're going to go down to at least 163. At least 160. But it's the same exchange. They're the biggest exchange in the world. Has nothing to do with the exchange. So right here, at 720, I beg people not to ride the profits back down. Here on the morning brief, I call it MB video. It stands for morning brief video. The timestamp was 25 minutes. Begged them at the top of this. Begged them. Most of them wrote it all the way back down. 3 people sent me a DM and said, okay, BC, I sold. I hope you were right. I'm like, if I'm not right, the most that we're going to see is maybe a deviation. Maybe a deviation. But sell. Take your profit. And you can just buy back. I'm not telling you to never buy back link. Just buy. You can buy a lot more at the bottom of this channel. Look at where we're at. Look at where we're at. And how did I know this? Because I'm smart enough to do this. A monkey can fucking figure this out, but yet crypto Twitter can't. Look left. Top of the channel, bottom of the channel. Bottom of the channel, top of the channel. Top of the channel, bottom of the channel. Look. Bottom of the channel, top of the channel. Bottom of the channel, top of the channel. Let's see. Really? Does that work? Really? It's like fucking elementary shit. But the problem is, people cannot get out of their own way. They're so blinded by greed, thinking that the market is going to go straight up any moment now. Their alts are going to go straight up. I'm in an hour and 12 minutes. I don't know if anybody's going to be hearing this by now. Anybody dropped off. But let me tell you something, guys, that you're going to hate hearing. You're going to hate hearing. Alts will not have an alt run until Bitcoin finds all-time high. That's when Altseason starts. I did a video for my group months and months ago, and we went through historical snapshots at the peak of Bitcoin, which was December 11th. We looked at the alts, and we looked at their charts. 95% of every one of the coins we looked at, their bull run started at the exact same weekly candle, December 11th. They were stunned. They're like, it doesn't seem right. It doesn't seem right, BC. We looked at this fucking chart. And you can do this yourself. Alts will not have an alt season until Bitcoin hits. Why is that? Because all the profits that were made from Bitcoin are then going to roll. It's a rotation. Are then going to go into these alts. People think this is an alt season. Again, their ignorance. This is just normal market behavior. This is no bull run. Look, want to see what a bull run looks like? This is a bull run. This is a bull run. People look at this, guys, and think this is a bull run. Oh my God, we're in a bull run. It's a fucking little blimp in the map. This is a blimp. This, again, it comes down to ignorance. This is a bull run. This right here. You see this low right here? This. Look at this. This is a massive run. This is nothing. This is nothing. This is going to happen again to most, if not all, the new projects coming out. All the old projects are going to do this. And this is part of the study that I've done as well. They're going to do this. They're going to hit 382. Very few, but a few do, 618. The majority hit 236. Some of them hit 382. No, excuse me. The majority hit here. Some hit here. Very rarely does 618 get hit. Very, very rarely. Just to give you an idea of where these coins are coming. But again, no one's going to believe them until it happens. I don't know if you guys are. I don't know how long you've been in this space, but you guys remember Lisk? Remember Lisk, guys? Back in 2017, Lisk was the protocol. Lisk was the layer. Well, I think it was a layer 1. This is going to overthrow Ethereum. This is going to be the next. What happened? What happened? Where's Lisk now? Where's Mothership? Remember Mothership? Fucking everything on your feed was Dragon Chain and Mothership. Remember that shit? What happened? Where'd they go? Yeah, they had dragon ships and fucking motherships and dragon chain tattooed on their asses, tattooed on their foreheads. What happened? Same thing with 9 out of 10 alts that ran the past season will not see all-time high. And it's incredible. You're trying to help people and warn them, but I understand why they don't want to believe it. Every single person who doesn't believe it fits one category and one category only. They bought this. They cannot believe it. They won't believe it. They can't process that because they went all in, and the only hope they have is that this one is different. People who are not bag holding, they don't care. Yeah, go to all the new ones. The new ones are the ones that are going to put the 10,000%. These are not going to put no 10,000%. They're going to put some good numbers, 600-700%. They're not going to put 1,000, 10,000% like some of these coins in the new coins that come out. But again, it doesn't affect me at all if you believe me or not. I don't care if you win or lose. It doesn't affect me. I want to help you not to lose, but I don't have any skin in the game as far as your livelihood and how you make a living and what you invest in. I don't give a fuck. At the end of the day, I don't give a fuck. I'm giving you my opinion. And am I right? Not all the time. Absolutely not. That's how I become a better trader. I have to experience losses in order to have the experience to be able to tell you what not to do. If you haven't lived through it, how are you going to tell people what they shouldn't do and what they should look out for if you haven't experienced that? I tell my group a lot, I'm a way better trader than you guys. Why? Because I've lost more money than you. Most people are not going to admit that. I don't give a fuck. Why don't I give a fuck? I don't give a shit what you think about me. You're nobody to me. I don't give a shit. But it's true. I've lost a ton of fucking money. That's what qualifies me to know what I'm talking about. It's weird, right, to say that. But it's true because I know what not to do. And that's all it is. That's what it comes down to, guys, is what shouldn't you not do? And what should you do? And what should you look out for? And only in this space do people don't appreciate that. Only in this space. Only in this space do people are going to talk shit to someone who takes the time out of their day to provide you free content, to try to help you to make money, to try to help you not to lose money, and they get ridiculed. It's incredible. That's why I don't do these that often. But I did one today. Hopefully you guys got some benefit out of it. And everyone have a great weekend.